Owning a home is still the American dream, but it comes with plenty of emotional and financial challenges. Join real estate broker Ron Evans each week as he shares the latest industry and local real estate market news through interviews with other agents and industry professionals. If you're confused about today's real estate market or just want to understand the home buying and selling process, this show is for you. Here's your host, Ron Evans.
Welcome, everybody. This is Ron Evans, and you have found the Real Estate 101 podcast and YouTube channel. And I am finally in my new digs, my new office setup, and I can't be happier to finally get back online, face-to-face or face-to-camera and screen with everybody. And today I'm bringing you, I've missed a week or so of this, but I'm bringing you some of the, or at least one of the top articles that have come out in the most current version of CAR, California Association of Realtors Market Matters Update. In previous episodes, I've gone through every single article. There's usually 5 or 6. I think going forward for 2022, I'm going to shorten things up and kind of abbreviate it and just pick the top article that I think is relevant for the current week. In the show notes and in the description on YouTube, I will highlight and link all of the articles that we were sent, but I'm just going to pick the one that I think is the most impactful for right now, kind of shorten and condense the show a little bit and take as much feedback and questions as possible. At the end, I'll give you some instructions and we'll go from there. All right. So out of all the articles today, I thought the one to focus on the most, and I'm pulling it up here, it comes to us from CNBC. So this is business and finance related. And it is titled, "Home Buyers Are Rushing to Get Mortgages Before Higher Rates Price Them Out." Now, in previous episodes and in other market update episodes and in my 2022 forecast episode, you may have heard me talk about the stagnation and the low inventory that we've had to start 2022 of homes available. Still some an extremely amount of pent up buyer demand. And a lot of that is just because the rates were so low. Sellers are on the fence about selling because where are they going to go? They see everything. There's no homes available. They need to sell their home to buy another home. How do we get all this in motion? And we have these super low, historically low rates that we've had for over 10 years. And finally, they're going to start going up because that should put some things in motion, we hope. So let's talk about that. Mortgage rates are rushing higher, and last week that caused a major divergence in mortgage demand. Refinancing continued to dry up. So again, everybody's already refinanced, or you can't really refinance something that you already had that's super low. So if you bought your home in the last couple of years and you're at a sub 4% interest rate, sub 3.5% interest rate, what are you really refinancing to and saving versus just extending your note? It may or may not be beneficial to you. People that bought when their rates were 4.5%, 5%, 6%, that supply is going away for lenders right now. So refinancing continued to dry up, but home buyers appear to be rushing into the market. Why? Because rates are going to start ticking up, and they're afraid that home prices have gone up so much in value that even the slightest increase in their interest rate is going to price them out of the current market. Okay, we saw this years ago, and we might be seeing it again. So as a result, total mortgage application volume rose 2.3% compared with the previous week. Now, if you've paid attention to previous episodes where we've talked about finances, you've noticed that throughout November and December, the new buyer applications were declining week over week. A lot of it had to do with the holidays, but also a lot of it was nobody knew at that point that they were going to raise rates this year, or at least start raising them so early in the year. We kind of thought it might be incremental throughout 2022, but the Fed's come out of the gates swinging. The average contract interest rate for a 30-year fixed rate mortgage with conforming loan balances, so that's 647,000 or less, increased to 3.64% from 3.52%, with points remaining unchanged at 0.45. That's including an origination fee for loans with a 20% down payment. That rate was 72 basis points higher than the same week 1 year ago. So we're 72 basis points higher today than we were to start 2021, and has increased more than 30 basis points in just the last 2 weeks. So you see there, that's how much it's gone up now just to start the year. As a result, applications to refinance a home loan, which are the most sensitive to weekly rate moves, fell 3% for the week and were 49% lower than the same time 1 year ago. The refinance share of mortgage activity decreased to 60.3% of total applications from 64.1% the previous week. Starting to go down. Mortgage rates hit their highest level since March of 2020, leading to the slowest pace of refinance activity in over 2 years. Mortgage brokers, for the most part, have been making their bread and butter off of refis during COVID for several reasons. Most importantly is while we've still been selling homes, and we've been selling homes at an insane pace, a lot of buyers have been cash buyers because they've been cashing out their equity, 401ks, getting loans from family, and things of that nature to just be able to outbid somebody and buy a home. And then they get into the home and they refinance to pay back their 401ks, the friends and family that they borrowed from, etc. It's kind of a trick that we've been seeing happen. FHA and VA refinance declines drove most of the refinance slowdown, said Joel Kahn, MBA's Associate Vice President of Economic and Industry Forecasting. Sounds pretty important. Mortgage applications from homebuyers, however, jumped 8% for the week, although they were still 13% lower than the same week 1 year ago. Now, the reason they're probably still lower than the same week 1 year ago is that to start out this year, we had about a third the inventory that we had to start out January of 2021. Remember, before I said in January 2021, we had over 3,000 homes available, which was still an all-time low to start out a year. This year, we had less than 1,000. So there's no need to put in a home application to buy a home when there are no homes to buy. The activity appears to be on the higher end of the market where there is more supply. The average loan size for a purchase application set a record, and this is a national number, at $418,500. So that's nationally. The average loan application was almost $420,000. That's not an Orange County or California thing, that's national. The slower growth in government purchase activity is also contributing to the larger loan balances and suggests that prospective first-time buyers are struggling to find homes to buy in their price range, added Kahn. That is true. The median home price range for just starter homes here in Orange County, you used to be able to find lots of homes for under $500,000. Not anymore. Now that threshold is more like $750,000 for first-time home buyers. And it's tough. It's very, very tough. That's the most competitive market that we have, or segment of the market that we have, is that price point. Demand for housing continues to be strong as supply did not increase as it normally does in December. Some buyers may be getting a jump on the usually busy spring market, concerned that rates will even be higher in a few months. That is true. They are still predicting rates to go up incrementally throughout 2022. So we are seeing people buyers coming out early right now, even though the supply has not caught up to their demand that we would typically see. We're going to see a supply increase throughout February, March, and April. But right now we're seeing buyers coming out early, trying to get in the game before the glut of other buyers comes on in the spring. But there's just nothing there. Paul Laguerre, a buyer's agent with the Joel Nelson Group in Washington, D.C., calls the activity unprecedented. Some lenders I work with say they have had more first-time homebuyer applications in the last couple of weeks than they've seen in 20 years, adding that he just wrote an offer on a $1.3 million home with an escalation clause up to $1.625 million and lost. This is not unheard of. Homes are selling for tens, if not hundreds of $1,000s over list price right now due to the amount of cash, like I was mentioning earlier, that's in the market. They're not worried about appraisals or anything like that when you are a cash buyer, or you at least have a high equity position in your down payment. You're not worried about an appraisal. You can bridge an appraisal gap, get an appraisal waiver, all kinds of things. The person getting screwed, pardon my almost French, is the first-time home buyer or someone who doesn't have 15, 20+% down payment on their conventional loan. If you are going with a low down payment right now, you are getting completely screwed out of the market to people that have more money or have been able to piece together more money for a down payment, because they can bridge appraisal gaps that you can't. They can get appraisals waived that you can't based on their equity position in their new home purchase. That's a problem. It's a problem that I'm seeing. It's as an agent. It's a problem that a lot of my colleagues are seeing. And at some point, something's got to give. I don't know what's going to make it give, if it's going to be continued higher interest rates that'll get some buyers to peel back. But I'm afraid it's going to get not the wrong buyers. It's going to get the buyers that obviously need to finance. They're going to peel back, and we're just going to continue to deal with the glut and the litany of cash buyers, which, don't get me wrong, I love all buyers. I want to get transactions going. But in the long term, I think to stabilize the housing market, we've got to get first-time home buyers into homes that they can purchase and afford to purchase and stay in long term. Otherwise, we're going to keep having this inequality with renting versus homeowning, and rents continuing to rise, because those people that technically they're paying a high rent, they should be able to afford a mortgage. They just can't beat out people because they don't have enough of a cash position to get into a home. So we've got to figure out something. I don't know what the full answer is. I don't know if it's interest rates going up. I don't know if it's some other sort of programs that they can come out with. I don't know. I'd be interested to hear some feedback from my colleagues here locally versus nationally with what you're seeing in your market, any ideas you've had to kind of get these deals to go through. But I have a feeling throughout 2022, it is going to be just downright scary for someone who's a first-time home buyer or a low down payment purchaser. They're going to continue to get screwed out of the market. So to sum it all up, the average contract interest rate for 30-year fixed mortgages right now with conforming loan balances has increased to 3.64% from 3.52% last week. That's according to the Mortgage Bankers Association. Refinance applications fell 3% week over week. Applications for a mortgage to purchase a home jumped 8% for the week and set a record for loan size at almost $420,000 nationwide. That's it. That's where we're at. I thank you for listening. I appreciate all your comments. Again, please share this episode, share my podcast, share my YouTube channel, comment, like it, subscribe to it, do whatever you can. You can find me on all your podcasting platforms available. And I appreciate all feedback. I appreciate all the questions that I get. Drop a comment in, drop a question in the comments. Send me an email direct at realestate101@ronevansrealty.com. I reply to everybody at my quickest time I can. And have a great weekend. See you next week. Folks, I appreciate your continued support. If you haven't already done so, please don't forget to subscribe and share this podcast with your friends. Leave your comments and questions below, and I'll get back to you when I can. Have a great day. See you soon.